Good morning, everyone. Welcome back. Thank you so much for taking the time to join me within this daily GameStop technical analysis and options chain breakdown. Getting right into it, on our 15-minute chart, we have a buy side liquidity aligning with our 4-hour bearish order block, acting as a point of resistance for us throughout the day. We also have a sell side liquidity acting as support. And through a break of structure this afternoon, we form a bullish order block. Moving forward, we can expect this buy side to continue acting as a point of resistance. If so, we can retest the bullish order block to move back up. Now, of course, we don't want that to break down and invalidate. That would be bad news bears for us. Ideally, we hold the break of structure that we formed this afternoon, but ultimately, we're going to have to wait and see until tomorrow, right? We'll see what the price action brings us. Moving forward onto our 1-hour chart. We have the 2150 exponential moving average reversal paired with our break of structure today. So here's our reversal signal, and we're pairing that with a key level breakout, which is this break of structure here, right? So here's our reversal, and then that gets paired with our breakout, which is nice. So that is a sign for continuation moving forward for the rest of the week, which is really nice. We did have a bearish order block here today as well that was invalidated. If the price comes back to this area, we can look for the formation of a bullish breaker block. However, we are subject to invalidate that as well to break through. However, when we start to align, a couple of these things, we can say, well, that's probably unlikely to happen. So I would just say, look for continuation here. Look for the break of structure to act as your support. But if not, things are always subject to change. Things are getting pretty channel locked today as we've seen, right? Specifically, even on the 1 minute, we can just jump to this really quick. Oh, that's 1 month HGG. So you can see how we were just channel locked all day, right? Until we broke out this afternoon. Basically just, between support here on the sell side and the resistance of our order block and buy side, right? So very ping-pongy, not really anything to do about that, but it's going to break one way or the other. And with the way things have been going, I'm going to guess that it's going to break upwards. However, again, we do need to wait. Onto our 4-hour. We see the bearish order block holding as that point of rejection or resistance multiple times. Again, at some point, this is going to break, right? And then hopefully we can come back and convert it into our beloved breaker block, right? So just rejecting that 4-hour, which is fine. We've seen the 50 acting as that pullback support. And then onto the 1 day. We have a couple of volume imbalances here created, right? We had one volume imbalance on the gap down. So if we can hold this, buyers are in control. And that really is going to go with all volume imbalances. And on that note, maybe we should kind of talk about a volume imbalance a little bit. So a volume imbalance is when significantly more trades occur on one side of the market than the other, just buying the whole order book up, right? And, ask side or bid side, which is a buy imbalance, or a bid over ask, which is a sell imbalance. And this is going to highlight which side is acting aggressively and can signal continuation, exhaustion, or absorption at that level. So how do you mark this out? Well, it's the distance between the candles that have a wick between them, right? So we see here, turn on our magnet. There's from the bottom of the body of this candle to the top of the body of this candle, where the two wicks overlay, right? Because it's not a gap. It's not a gap because we have the wick here, right? But what it is a volume imbalance. And then we have another created. The first one was on the downside. This one is to the upside that we made today on Monday's gap up, right? So the wick extends up and this wick extends down, right? So they cross each other. So it's not a gap, it's just a volume imbalance, which is quite similar to a gap in how it acts, right? So if we can hold this, buyers are in control. If we can't, it's going to signal that buyers are exhausted and sellers are potentially going to take over, right? So just technically speaking, with ICT principles, that's how we kind of interact with volume imbalances. That's how we identify them. And again, just at the end of the day, everything really boils down to support and resistance, right? And then just kind of aligning all of those together. So look to retest this area for bullish trend continuation, right? Either of these imbalances, as long as both of them hold, or one of them holds, I guess that would be good. There's a good chance, that we do see some form of retracement into this one. Not bearish if it retraces into, but we just want to see the whole thing hold, that bottom band. And then the fact that this is there as well, maybe we'll just use the upper band of this second one, right? Again, this is kind of up to an individual's taste as how they interact with them. Personally, that's, when they're closely together, I may, just take the upper band of the other instead of the lower band of the first, right? Just, what is that, like an extra 20 cents? So it is really not much. Anyways, that's kind of my readout on GameStop for today. Obviously, we have the 1-day reversal signal with the trend with the key level breakout and the trend retest, which is now expanding upwards, which again is exactly what we've been looking for. A little bit slower than I would like, but we're going to get there. We are going to get there together sooner than later, I feel. But again, sometimes I'm a little ahead of the gun here. So let's back up a little bit, and we're going to look at the Rory Kittinger indicators here as well. So first things first, on the 1 hour, I would like to pull your attention to the moving average crossover. Well, isn't that strange? I'm sure we were on the 1 hour. Oh, wrong chart. Yes, on the 1 hour. We have our moving average crossover, right? So we did flip bearish the other day, and now this morning in pre-market with that gap up, we flipped bullish, which is great. So the principles of the moving averages, whether they're simple or exponential, and what number they are, it's going to be the same, right? You're just looking for the shorter averages or the faster averages to be, trending above the slower averages, right? So in this case, we have a 20 and a 50, which are now both, well, not both, I should say, because the green is the 100, but the 20 is trending above, and then the 50 is looking to cross over maybe tomorrow, maybe the next day, right? And then, where all systems go when the faster averages are above the slower averages, right? And then that's how you want it to be for continuation. On that note, the 1 hour bearish reversal signals, right, look to be really good pullback or re-entries if you are scalping this, or you've got option contracts that you're looking to load into potentially. Like even here, that reversal into, continuation up, reversal down, continuation back up, which will go higher as well. Even here again, right after this first pop, bearish reversal, really good ads for continuation up. So that's kind of how I've been looking at these moving averages personally, not only for continuation, but because I'm bullish overall on the stock right now for those pullbacks and trend retests as well, right? So not only capitalizing off the the bullish side, but also the bearish side, while we remain bullish overall, right? So this is looking good. Get to the 4-hour on the bottom. We have our signal lines reversing again, right? To snap back up, and we were kind of talking about how you're going to get these false sets multiple times while you wait for the 1 day to complete, and you'll see we're now, instead of converging back together, we're diverging again, which is great. Let's get those lines to separate, increase the distance of them, pull them apart, and that's going to allow us to trend up as well here. So that's okay. We don't mind this. And then the 1 day MACD crossover as well, which is great here. We flip positive, which is nice. Again, for maybe some continuation, right? Signifying that the pullback is over, right? And we can maybe make another leg up. And then we have our daily volume, I guess, on my charts, which was what, 1 day. 7.98 million today, and our average is 9.3. So below 20, I'd like to see our volume up around 20. Ideally 50 to 100, but not every day can be perfect. And aside from that, we can maybe look at our borrow rate, which is starting to climb. Shorts. Borrow rate, 0.78. Rebate is going down. Shares available is actually up a little bit, which is interesting. But let's get this fee up. Let's get the rebate down. Let's see if we can get 5% fee and 0% rebate. Wouldn't that be nice? IV is not really up, kind of tracking sideways, with price up a fair amount, which is interesting. So hopefully IV gets priced up tomorrow, and we can all capitalize on that. Hopefully we also fill the gap tomorrow. Who knows, though? And now options chain. Where's our CTV? And we'll just jump over here to options chain. Max Pain's 25.5. Hopefully we move this up on the week, but we continue to trend above it, which is super good. Put to call ratio is increasing, which isn't super great. But at the end of the day, we have a ton of calls in the money, and even more to come in the money as well. A lot of open interest at 30 across multiple expiries, right? So this is going to act as a big old resistance point unless we get above it, right, and can convert it into support. And it's not likely, I don't think, if we do break above, to snap back because of all of the other open interest on further out expiry dates, because it's not just this week, it's not just this monthly expiry, but it's this quarter and it's this whole year into 2027 that this open interest remains on chain. So it is stacked up. So if we can get above 30, 30's by golly going to be the new floor. I'm coming out to say it. And we see a lot of volume on that today. If I personally were throwing money at the weekly options chain, I would keep it in a little bit. I would force the market makers to hedge delta with just out of the money, like 28 fives, 29s, 29 fives. And then that hedging is going to be what throws us above 30. And then we can lock it in with the open interest on those other expiry dates, right? So we could have that happen. If someone's willing to squeeze the chain this week, that would be great. Thank you so much. We could also have continued warrant hedging. Preemptive hedging for the warrants is, kind of what I think is going on right now. And that should cause the bond arbitrage short position to be rebalanced or completely unwound, depending on how high we go, as they will force close that position around 37 if we can break that, which is quite a ways away. And we do need to remain there 20 or 30 days, but eventually that's going to happen. Aside from that, we could also maybe have like a social media based catalyst to get us above 30. So a couple different things that could help us get above 30. If not, it's going to be hard rejection as far as I'm concerned until the monthly expiry of what is it, October 17th. And then once that is off chain, I think then they let it go. Just my opinion, the market maker is trying to maintain control of this stock. So, yeah, this week we likely find rejection around 30 unless sustained buy pressure, warrant hedging, bond arbitrage, or hedge rebalancing or unwinding, or potentially increased retail pressure. Next week, the 10th, open interest is starting to fill out. Lots of out of the money contracts stacking up. Please, for the love of everything that is holy, buy your contracts at the money, just out of the money, how we previously discussed, 50-cent increments, maybe $1, and that is going to force the market makers to work up. If you're buying them out of the money, there's no delta to that. They don't have to hedge it unless we get to it, at which point that's going to change things. But you'd be better off playing at the money. I'm not entirely sold on the warrants being the end-all catalyst that sends us into MOAS. Hopefully it is, but I've been around long enough. Sorry. Will we see price improvement? Sure. Will we get above 32 and people start exercising? Absolutely, at some point. And will that cause general dilution and bring us back down to repeat the cycle? I think so. Yeah, I think so. Is it MOAS? Again, unlikely. I don't really think so, but I am happy to be proven wrong. Please and thank you. That would just be delightful. So yeah, open interest starting to fill out, lots of out of the money, and nothing's a sure thing. Warrant pressure could take months to build up, right? Realistically, and I personally wouldn't buy anything past 30. Single strike out of the money is best, or even those 50 cents to force the delta hedging, which we've already talked about. Okay, monthly OPEX is around, right? There is a lot here. Like even today, 10,500 30s. Oh, sorry, 29s. Oh! You remember that thing I just talked about? This is what we want to see is like I love the 30s, don't get me wrong, but can we get some 29s on chain? I've been looking for these 29s for weeks now. You hear me crying about it video after video. Oh, these 30s, there's no 29s. Well, I spy some 29s, and that's really good for these 30s on the month because the market maker does not want these to be paid out as far as I'm concerned. So I would honestly think that we see some 29s for that week as they want to pin us just under 30. But now there's this massive support at 29 that needs to be hedged up. So that's good news. Love to see it. And a big reason as to why we check the options chain every day, right? So those 29s building up is great to see. And, there's a bunch at 25 and incremental support here at 26, 27, 28, and now even the freshly built up 29s, which is great to see. And, we can move out into January from that. Again, 20, 25, 30, just walking ourselves up. Some 35, some 40s. Not a super fan of those. Again, you got to remember that these aren't really leaps anymore. This is like a quarterly option. It's right around the corner. If you did want to buy those leaps and you were looking for those, 35 pluses, let's take a look at the Jan 2027s, and you can see people building around these 35s already, which is nice. Obviously, the 30s and 25s are going to be better here, just like we have the 20s, 25s, and 30s on the Jan 26. On Jan 27, we may want 25, 30, 35s, right? And then we continue just to walk it up slowly, year by year, right? Oh, it could be a long process, right? So I know everybody wants this to be done immediately, but just take advantage of the cycle. You buy in low on trend line, sell high during a liquidity event, an influx of volume, which we've yet to see. Our average is still low. So we big chilling on that. That's today's video. We're keeping it pretty groovy. I seen someone today with blue boxes talk about how the AMC was a warrant dividend, and I just about had an aneurysm because it was a special dividend, not a warrant dividend. Two are the same, different. See, now I'm doing it. So let's just be careful. I didn't see any comments for correcting it, which was super duper worrisome to me and made me think I was wrong. But then I double checked it, and we're not. So again, just be cautious of the things you read. Definitely fact check everything, even the things I'm saying. Obviously, I'm not correct all the time. I'm prone to mistakes, truly, and I would love for any help along that journey. As maybe not all of us are trying to be nefarious, trying to stir up synthetic hype. We're just excited ourselves and maybe a little bit confused. So on that note, we had someone jump into the comments and say that was a breath of fresh air. Wasn't trying to sell anything, and you know what? That's kind of one thing that does drive me crazy is that the selling of the discords is pretty brutal. If you're that good at trading, you shouldn't need to be selling Discord access. Um, and then if you like, I get it, you want to be rewarded for the time you're spending to teach people, but shouldn't you just do that, straight up? And then A, you've got ad revenue, which is what I'm here for. Thank you very much. But B, if I am able to help you or someone else, one of these others, are able to help a trader out and make a bunch of money, which they all claim to be doing, wouldn't they just come back and tip you? Mm? So you're never going to have any of that here, right? This is just, my technical analysis. I don't have a website to sell you. I don't have a Discord to sell you. And I'm never going to call you an ape. That's another massive red flag to me is some of the language that's used just drives me insane. So, uh, oh, he's a nice guy. No, I mean, I get upset pretty often. It's just my personality type, but also at the same time, I'm always super happy. So it's kind of like the grass is always green situation for me, which I don't mind. And I think rambling here a little bit, that's part of being a successful trader is looking at the other side of the trade or the opposite perspective. And now that could be just within your trading things as well. But for me, it's bled over into everything in my life to the point where I'm a serial contrarian and just love to play devil's advocate. Not necessarily that I believe that, but in order to explore it, to confidently decide on my beliefs. All right. So thank you all so much again. I hope you have a magical day. Make sure to leave a like, drop a comment, subscribe to the channel if you haven't already done so, and I will see you soon in the next. Have a great morning.